You've landed on the Crypto Kid channel. I was about to say you've landed on the Moon Show, but today we're live on Crypto Kid to cover the CPI data be announced. It is, like we stated on our previous video, going to be one of the most controversial inflation data releases. Why? In a nutshell, previous June inflation came out to be at 3.5%, a shocking 70 basis point drop from May. We thought it would be lower, but I didn't think 70 basis points. I thought more in the 50 to 60 basis point range. The truth was, crude oil prices that are the primary influencer of recent inflation-based volatility, a 2.4% from going from 2.4 to 3.3. That shift from Feb to March was only because of crude oil prices and the unfortunate closure of the Strait of Hormuz and complications within the Middle East when we refer to geopolitical tensions. In May, going into June, a huge drop in crude was observed. There was a more positive note, and we all assumed that we could find a peaceful conclusion, a bureaucracy-based conclusion. The Strait of Hormuz was opening up. Supply chain, the transportation of goods all across the world became less complicated for a brief window. Speculators brought down the prices of oil because the theory was crude can travel more freely across the world, and all petroleum-related derivatives, from clothing to the fuel that you put in your car to kerosene, the fuel that you put in your airplane, so on and so forth, would become more affordable. And as energy becomes more affordable, then inflation drops. That short-term volatility, the spike you've seen from geopolitical tension, dwindles away. It was looking good. From May into June, it was looking good. Inflation saw that respective drop. However, when we talk of global geopolitics and crude oil prices on the 12th of August 2026, it's very different. Strait of Hormuz blocked again. Crude oil up 25%. So I don't see how the consensus expectation of lower by 10 basis points from June into July make any sense whatsoever. Like in July, if we eradicate August, in July, you peaked on the 23rd of July from the low in June, or the first day of July, you go up by 37%. And then you end off July by being up 28%. So in my opinion, and I could be wrong, but there is no logical explanation. The interest rates were not hiked. Tariff refunds aren't really contributing to much. Inflation should be higher than 3.5%, and the shock from what consensus is expecting will create dramatic amounts of Bitcoin volatility shortly. We've got a small W pattern, but I need to be honest with you. I'm not trading this news event at all. It's too unpredictable in the sense that recently, through months in 2026 and even 2025, Bitcoin and global assets did and moved in irrational directions. They didn't go ahead with what logically makes sense in terms of price performance. If you have, let's say, dovish interest rates data, or if you have a dovish speech from a Fed chair, then Bitcoin should, well, ideally, dovish would cause it to go up. But you didn't see that. And now, guys and girls, the inflation data has clearly been announced that we can see the volatility that we expected. Again, I'm not trading it. I don't want to trade this news event. I'm in more midterm and macro-based positionings, which we'll cover in detail on today's show. But before doing that, let's try and find out from trading economics if inflation was higher in July or if it was lower in July. The probability table is going to switch. If 3.5% and below is seen on CPI, then the 3.5%, anything below 3.5% will indicate rates staying the same. But 3.5% and above should change the probability diagram to support a rate hike. I'll cover that in a bit more detail too. What is inflation? Come on, trading economics. 3.4%. Wow, it matched expectations. Honestly, I am shocked. I am shocked, ladies and gentlemen. Shocked. So Bitcoin should be going through the roof, but technically it's not. It's seeing a dump. That's what I mean by the unpredictability. It's genuinely shocking. there is no reason for CPI to trade lower in the month of July. Like zero reasoning. Zero reasoning. Crude oil is up. Strait of Hormuz is blocked. Gasoline prices in America are still trading at areas not seen from 2022 and onwards. And in 2022, inflation was a lot higher than what we have now. If we go to 10-year, 2022, 9.1%, 8.5%. This was from crude spiking in the beginning of the very tragic war between Russia and Ukraine, when crude oil went up then to $126 per barrel, if I remember correctly. Let's go back. When we went to $120, $126 per barrel, that's when US CPI was at 9.1. And combine that with the interest rates being at 1% to near zero levels and all the economic stimuli given from the government, they doubled the money in circulation. That all created a perfect storm for huge amounts of inflation. So we are in a different time. We are definitely in a different time. But looking at short-term factors of influence for United States CPI data, you have crude oil coming in at number 1. Number 2, is the Strait of Hormuz blocked or is it open? And the price of crude tends to be adjacent on the blockage. Whether if there's a blockage, then crude oil prices are higher. If it's open, then crude is down. You have energy, you have supply chain logistical issues, and just overall concern and worry of potential escalations, God forbid, in military attacks. Because if there are, God forbid, if military attacks persist, then such actions require fuel to power things and all. But yeah, let's not even talk about it because that's the last thing that anybody. Let's just pray that we don't see any sort of military escalation and that we can solve things bureaucratically and as peaceful as can be. But all factors pointed to higher inflation. I'm genuinely shocked. I didn't expect it. Market expected it. So the consensus was 3.4%. And since we're matching consensus, Bitcoin, realistically, you should go up a bit more because the shift in probability for a rate hike should drop. So rate hike probability should go down and the percentage will skew towards keeping rates the same. So that short-term dovishness needed to pump Bitcoin a little bit. But because we're meeting what the market was already foreseeing from beforehand, why should we be too volatile? Like, we're not going to be too volatile. The probabilities are anyways 55.9%. Rates stay the same in September. Fed board members across the 12 have been saying, Lisa Cook, Kashkari, I forgot the third one. They were clear. If no disinflation is present, if we do not see signs of disinflation is a reduction in the overall gradient of inflation you notice. So it's when things are becoming more expensive, but they're becoming more expensive at a slower pace. So a drop from 3.5% to 3.4% is categorized as disinflation. De-inflation, which people often confuse the two, de-inflation is when things become cheaper. So you would have to see negative CPI for de-inflation to become true. Anyways, the board members stated that if we do not get signs of disinflation, then we will have no choice but to go ahead and hike the interest rates. If you see a hike in the interest rate, you're restricting monetary policy that's already massively, massively restricted. And risk on assets that account for USINTR. Risk on assets that account for capital to be borrowed at cheap rates or individuals to not maintain cash in the bank and rather decide to put their money into things like Bitcoin or into things like the S&P 500 to risk on assets, they depend on rates being lower to experience massive surges in value. Some assets are more sensitive to liquidity. Interest rates are a measure of liquidity. Some assets are more sensitive to liquidity than others. Like altcoins will be way more sensitive to interest rate drops than what, let's say, the S&P 500 index will get as a result of a rate hike or a rate drop. I can show you Total 2. Total 2 is every cryptocurrency aside from Bitcoin and Ethereum. When the interest rate went to zero, it takes a couple of months, 1, 2, 3 months for monetary policy decisions to produce an impact in the economy or markets. It took 2, 3 months, but altcoins surged from nothing, like $163 billion in market value, to a peak of 1.5 trillion. That's a 10x increase. When cheap money can be borrowed, you get economic stimuli from things like COVID checks, so on and so forth. Why should you keep your money in the bank? You're getting nothing from keeping your money in the bank. I might as well put it into Bitcoin. I might as well put it into the S&P 500 that yields me an average return of 10% historically over 90 years. I mean, if we go back 90 years into the Great Depression, the historical average return for the S&P 500 was 10%. So I might as well just go ahead and purchase that instead of keeping money in the bank, which loses and erodes value to inflation. When they print more, monetary debasement occurs, a phenomenon where the US dollar loses value to scarce assets like Bitcoin and assets that provide an income like stocks and the S&P 500 index, which is a accumulator of the best performing 500, or not the best performing, but the top 500 stocks in the market. So unless you divest towards things as such or real estate, then your capital is in serious risk of losing huge purchasing power in a very short amount of time if you keep your money in the bank account. That's applicable to when interest rates are low. And we had low interest rates in the bull market of 2020, 2021, and crypto prices went bananas. That was banana season. But we cannot see banana season. Why? Well, interest rates are restrictive. Restrictive monetary policy needs to end, meaning we should forget about rate hikes and seriously consider major rate cuts for Bitcoin to surge to supercycle, for altcoins to have the altcoin season that we've all wanted and we all deserve after years of waiting. But how probable is that? Well, that's the question that I will aim to answer next. But in the meantime, I know it was a super spontaneous live stream, so I want to appreciate every single crypto kid for tuning in. I should have announced it from before. My plan was to make a video update covering it, but I had some time in between two meetings, so I said, you know what? Let's go and live stream it. Will probably be more valuable for you guys. So I appreciate you joining. If you have any questions, do let me know in the chats. And also tell me which city and country you're tuning in from. Is it hot there? Is it cold there? I'm tuning in from Dubai. It is very hot, very humid. Yeah, so that's why we're constantly in air conditioning for the moment. Native Faith, impromptu news alert, exactly. David Maitland, have you ever told anyone, CK, to put their funds in? Nope. Never heard of that before. At all. Peter Sabotzalai, hello. Hello, Peter. Peter John. Okay, I see some profanity there, so I won't read it out. Emmy, hello, Crypto Kid. Hello, Emmy. Thank you for tuning in. I guess Japan can chill about monetary policy and selling US yields. Yeah, well, the greatest accumulator of American debt is actually Japan. And there was a serious risk of Japan liquidating American treasuries in a time period of where America needs more and more countries and more institutions to buy up the debt, the bonds. If the biggest holder of American debt decides to sell to support their own currency, you put USA in a very tricky spot under the window of fiscal policy. The national debt sits at $39.8 trillion. The last time I checked, America still needs to refinance $9 trillion worth of debt, and they do it through bond issuance. If nobody wants to buy bonds, and the biggest holder of those bonds wants to sell, then your pathway is bankruptcy. There's no way of averting it unless you print huge chunks of money, which probably will be the only solution that policymakers will have left to deal with no significant interest for American debt and the holders wanting to sell and liquidate. They're going to have to print a bunch of money to repurchase their own debt, which will further devalue the dollar and push Bitcoin and altcoins up. Okay, is it super cycle producing gains that we will see over time? Unlikely, because for that, like I said, you need US interest rates to capitulate. They need to absolutely capitulate. If they don't capitulate to near 1%, 0% territories, we can kiss banana halal goodbye. But it does not stop the printage of money and the devaluation of the dollar, reverting you from a bear market into a bull market in accordance with your 4-year cyclicality. So does Bitcoin stop appreciating and stop going up just because we have restrictive monetary policy that will end at some point? It's not forever. No, Bitcoin will, from my view, continue on with its 4-year cycles until it breaks. We still haven't broken it. We're still, forget this line. Don't let this line scare you. This was just a very hypothetical question asked by a friend. We can get rid of this line. No need to talk about it. Doesn't mean anything. Bitcoin will just be doing its cycles until they're broken. However, do not forget that we have forever debt that's unpayable. This national debt of $39.8 trillion is not payable in any way, shape, or form. It's just impossible. It's unfeasible. You can print more money to pay it off, to avoid bankruptcy and the dollar losing its reserve currency status that nobody wants. And if you print more money, you make the dollar less valuable, and you make anything that is scarce or income producing, like companies, individual stocks, they become more valuable. So how am I escaping this corrupt sounding financial system? Because it is corrupt. It's just boom and bust cycles dependent on broken Keynesian economic structures that once you learn, actually, you can leverage to your advantage. These assets, not only do they hedge you historically against inflation, but they provide profits additional to the capital loss prevention they serve the purpose for. So over time, everything goes up. The correct assets, not everything. I'm talking, when I say everything, I'm saying Bitcoin, I say the S&P 500, I say gold. That's my categorization of everything. 3 unique assets, which I should refer to in particulars. But this chart, or this demonstration I've got 2 demonstrations to show you. One is this one here, and another is going to be I just had it up, from Peter Mallouk. Peter Mallouk, can't find it. I have too many tabs. That's the issue with having too many tabs. You get lost. There it is, Peter Mallouk. If you had invested $10,000 into the S&P 500 in July of 1976, if you would have just invested $10,000 and forgotten about it, after 50 years, that 10K is now valued at 3.7 million American dollars, a return that is sensational. A return that is sensational. But there is an illusion. When your scarce assets and your S&P 500 index is appreciating, it looks to be it appreciates against the US dollar. So what really is happening that not many understand is actually the dollar loses value, causing the other assets in that contract to appreciate in value. The dollar is not staying stagnant at $1 equals $1. $1 depreciates year on year as the printing of money increases, as inflation increases. A dollar, or $10,000 in 1976, does not equal $10,000 50 years later in 2026. So the nominal value seems to have increased by vast quantities. 10x will take you to 100, 100x will take you to 1,000,000. You're looking at a 377x increase. But I can bet you that the United States reserve currency would have depreciated by over at least 80% in 50 years, causing the other asset in that contract, which for our case with Peter Mallouk is the S&P, to go up by 377x. We can actually check out the inflation tool, which only uses documented government inflation data, which we all know is false, and that real inflation is way, way higher. You know that if you check from a year ago, like the price of, let's say, crude oil is a great example. it's way, way, way above 3.4%. Crude is way, way more above than just 3.4%. It's appreciated a significant ton more. Inflation tool 1976. I apologize if my speech is a little bit less fluent today. I've been shooting an amazing new vertical drama series. Actually, it's my first ever acting debut. The crypto kids who've been watching me for a while know that I've always wanted to be an actor, and today I've done my debut. So I've been shooting from 7 a.m. in the morning until 2 p.m. and I just had a quick sandwich right before. And last night I couldn't sleep because I was so excited. So I apologize if I'm not the most fluent in my speech today. I'm just super, super tired. My brain is a bit foggy. 1976, so $10,000. 1, 2, 3. 2026. The S&P 500 index would have yielded you from 10K invested to over $3.7 million. But in reality, the US dollar lost so much value that actually $10,000 in today's money is worth already $60,000. The purchasing power diminished to the floor. And not only did you protect your capital by investing, not only did you protect it from inflation, you outperformed inflation by multiple folds, being the investor. This is what I'm trying to tell you. We don't have historical data as such for Bitcoin. Bitcoin hasn't been around for as long as the S&P 500, which has pros and cons. The cons are you can't create multi-decade long of substantive analysis that points towards just buying the S&P 500 and forgetting about it. And over time, you'll have an average return of 10% that compounds. The most powerful force in the universe, according to Albert Einstein. It compounds, and suddenly, in that 10-year gap, it goes exponential. It's like going to the gym. You go to the gym, you go to the gym every day. You see some progress from month 1 to month 2, and then some more from 2 to 3, and some more from 3 to 4. But on month 5, oh my God, you're like a completely different person. That's called compound interesting and exponential returns. It's the law of exponentiality, x cubed or x squared, in fact. With Bitcoin, yes, there is a con of not having as much data as what you have with the S&P 500. The S&P will have bull markets, will have bear markets, but all bear markets are far less greater in magnitude comparative to the bull markets that follow afterward. You just buy and hodl, you're good, according to historical data. And that trend should continue with more money printing, which we know is going to happen because the US national debts cannot be serviced, even under an administration who had the most ambitious hopes of addressing that concern through the Department of Government Efficiency, which is no longer a thing since January of this year. Nobody's talking about it. Everybody forgot about it. They wanted to audit the Fort Knox. That didn't take place. Tariffs were allegedly going to cut the deficit, but he did the tariffs, and then they had to pay a bunch of money in refunds, and the whole investment logic in companies. Should we invest in America? Should we invest elsewhere? That gap of uncertainty created large damage to the economy, in my view. So under the administration, whom was the most ambitious in solving the elephant in the room problem of national debt, you saw the debt increase by $1.5 trillion. The deficit went up. That's an issue. That's an issue, and it tells you that we will continue having this issue at prolonged magnitudes, which means anything that is scarce, such as Bitcoin. Not anything that is scarce, I would say particularly Bitcoin. Bitcoin being better than gold in every way possible. Bitcoin being new, asymmetric information. A lot more people have gold than they have Bitcoin. Already a good track record in the 18 years we've been around for. A predictable pattern that we operate in makes it for young investors like myself. I would understand if people who are older may struggle with trusting in Bitcoin and putting their capital in Bitcoin and sticking to mostly one asset in their portfolio. But since I'm young, I can afford to take that risk, and I'm happy to take that risk because the biggest risk takers that take risks logically with valid and credible evidence and theories to support why they're doing a certain thing get the largest rewards and payouts over a consistent period of time. So my bet is Bitcoin. I think it's better than gold in every way, shape, or form. Gold is valued at over $20 trillion. Bitcoin is valued at less than 1.5 trillion. Bitcoin is scarce. Bitcoin can be transported from anywhere in the world within seconds for a fraction of a cost. It doesn't need to be governed by an institution or a government. You don't see the same manipulation that you experience in gold with Bitcoin. It's everybody's asset. It allows every individual on planet Earth to have access to finance, to be banked via a non-bank. That's a problem where 1.5 billion people do not have access to banking. And because of a lack of access to infrastructure, you see prolonged poverty in certain regions of the world. Bitcoin can solve that. And I believe with my strongest intentions and from the bottom of my heart that this is not valued at 1.3 trillion. It's valued at tens upon tens of trillions of dollars. That asymmetric upside opportunity with my own ability of having a higher risk appetite and more theoretical years to invest and be in an asset. As a young individual, I'm happy with Bitcoin. I think the Bitcoin investments that I do today at 19 years old, if I can maintain for 10, 15 years, when I'm 35, God willing, 40, I think I'll be much more secure financially to retire and just do whatever I want and have that generational wealth that I can pass on to my kids and they can pass on to their kids. But when I do pass on the money, I want to be careful with one thing. That's teaching my children exactly the skills that I trained myself on when I was a teenager. How to find skills and better your skills, find what you love, see if you can develop skills on what you love and create cash flow from that. Make sure to work as hard as you can, and if you can, all of the money you make, or at least a significant majority, save in inflation hedging assets that have long-term opportunity, that are scalable, that are asymmetric, such as Bitcoin, and keep doing that for as long as, for a prolonged period of time, compounding. And your returns will be exponential. And if I get the blessing of making generational wealth, it doesn't die at my second generation. No, it continues for multiple generations. That is actually the explanation to how you can make significant capital from Bitcoin and cryptocurrency overall. But it's a boring process. It is a process that needs a lot of hard work, patience, and persistence. And I'm telling you, 99% of the world are not able to do that easy sounding pathway, which gives the 1% who do follow it a much bigger chance of making it big. I'm just sharing what I've learned through the conversations I've been lucky to have, through the books that I've read, and through my 6 years of experience in cryptocurrency. That's not a lot, but it is a major part of my life. That's 1/3 of my life. I've understood to take it the long way. The long way is the better way. Maybe money doesn't come as fast, but it also doesn't go as fast because you learn patience, you learn risk management, whatever cash you're able to save, whatever cash you're able to make on your investments, you know how to retain it, you know how to be responsible with it. So with that, Crypto Kids, I think I'll call it an afternoon. Bitcoin hasn't been so much volatile due to inflation matching the consensus expectation. My TA from last night didn't change. If you would like some in-depth Bitcoin technical analysis, I highly recommend watching this video. I will put a link and pin it in the live chat for you right now. Any questions? Very happy to take. And I'll stay around for another 2 minutes to answer them. And I just want to say thank you all for watching this impromptu stream that I wasn't planning on doing before, which is why I couldn't update you guys and alert you guys from beforehand. But I hope it was valuable nonetheless. So I just pinned the video in the live chat if you'd like in-depth Bitcoin TA. That is the video I would recommend watching. And I'll be around here for another minute to answer any and all questions. Oh, the acting. Yeah, today I did the vertical series shoot. I had the time of my life. Like, I'm so happy. I've always dreamt of being an actor, and I used to be a musical theater actor before getting into crypto. I did musical theater, and then I got a couple of jobs in voice acting, and I saved up $1,000. And I knew that school wasn't for me, and I knew that I probably won't make as much money as I imagined as an artist unless you become a Brad Pitt or a Leonardo DiCaprio. So I decided to invest my money, and my dream was to circle back and get back into acting in some way, shape, or form. And today was my debut. So I can't tell you how happy I am. It's just that I'm so tired. I can't show you the enthusiasm that I feel internally. But in the bear, if you can find things that you love, now is the time to, you know, put some of your mind to it, not leaving crypto, but doing the things you love to make sure you don't get bored and burnt out. And the whole point of life is to be happy and do things that you enjoy. So in the bear, when we have a bit more time on our hands, why not go ahead and do that? Tony says, congratulations on your acting career. Well, it's the very beginning of it, but thank you so much, Tony. Peter says, thank you for the stream. Appreciate you, Crypto Kid. I appreciate you, Peter. Hi, Crypto Kid. Where do you see Bitcoin going in the next 6 months? Well, 4-year cyclicality is my base case until it's broken. So towards October, I expect a final capitulation. We may not see it, which is why I'm already buying up Bitcoin spot, and I'm waiting to get a break on the 200 weekly daily moving average that coincides with multi-cyclical support turning into resistance, our log scale trend line from October 2025. When we get a break of that, to me, it will be confirmed the bear is over, and I'll jump into my $500,000 long position that I'm planning on doing so. And yeah, just a slow upwards appreciation after getting our Q4 capitulation, if we get it. We don't have to get it. But when we end the bear market, I don't see like we jump to new all-time highs like that. I think it will be a slow process, and we must be prepared for that. All right. Thank you so much for watching, guys and girls. I'll see you tonight on the Moon Show. Carl will be joining too, so I'm excited. With that, take care. I actually got dressed up. Let me show you my costume. So the character I'm playing is an investor who puts money into, I don't know if I can say so much, so maybe I shouldn't, but he's an investor. And I'm wearing this super nice suit, which unfortunately you can't see much of. But anyways, when the series comes out, you can let me know what you think. Ladies and gents, thank you. Take care, and I'll see you soon. Bye-bye.